Dear student, Assalamu alaikum. I hope by the grace of Almighty Allah, all of you are fine. This is our third lecture from Capital and Revenue Transaction. First lecture and second lecture we have discussed details about capital and revenue transaction. Today also we will discuss some problems about capital and revenue transaction. After this class, you can able to determine deferred revenue expenditure. Dear student, you can also determine capital expenses. Dear student, you can determine revenue expenses and determine capital receipt and able to determine capital income. This is CQ2 from your books. So this is the question. You can take your books so then easily you can see the question and you can solve the problem. Let's come to our class. The amount of deferred revenue expenditure. Dear student, in the first lecture I have discussed in details what is deferred revenue expenditure. Deferred revenue expenditure means the expenditure which is look like an expense but it gives you benefit more than 1 year. That means it is an expense which gives behavior like an asset. That's why this is called deferred revenue expenditure. That means the benefit of this type of expense will enjoy more than 1 accounting year. And in CQ2 we have found 2 deferred revenue expenditure. Number 1 is business transfer expenses. Business transfer means, say our business is in Uttara. If we shifted this business for our business betterment in Motizil, so then the transferring cost will be deferred revenue expenditure, because for transfer the expense is short time, once only, but the benefit will enjoy unlimited time. That means how long our business will run in Motizil, we will enjoy benefit for that time. That's why this is deferred revenue expenditure. And another one is research expenses. Research expenses of a new product. That means your business organization take research for producing a new product. Like we can say mobile company. Every year they launch a new model. So this is research expenses. This is expenses, but this type of benefit they enjoyed long time, how long that model is in the market. So I think, dear student, you understand deferred revenue expenditure. Now, capital expenses. This is also we have discussed. Capital expense means the benefit of this type of expenses will enjoy for long term. And this type of expense is not occurred regularly in the business. Generally, asset purchases are capital expenses. Look at our math. April 4, machine purchase. That means a machine will not purchase every day, every month, every year. Rarely the business organization will purchase a machine. So it is capital expenses. Then carriage expenses per machine. Dear student, this is very important. You may mistake here because capital expenses, carriage is a revenue expenses. But when it is done for any asset, that time it is capital expenses. So keep it in mind. Then new machine installation expenses. This is also like carriage. Installation expenses is regular expenses, very small expenses, but it is for an asset. So if we done any types of revenue expenses for any particular asset, then that will be also a capital expenditure. That's why here carriage also a capital expenditure. Here new machine installation also a capital expenditure. And last one is new battery and tire purchase. You know that if you buy a battery and tire for our car, it will give service at least more than 1 year, 2 years, 3 years. So this is capital expenditure. Then our next requirement is revenue expenses. Revenue expense means recurring expense. The expenses occurred in a business organization regularly and enjoyed the benefit short time. That is revenue expense. So here revenue expense, April to stationery purchase. Stationery means paper, pen, pencil, carbon paper, etc. are the stationery for organization. So frequently organization will buy this type of things. That's why this is revenue expenditure. On the other hand, another one is repairing expenses of old computer. That means any parts may be damaged. That's why the repair expenses is done for that computer. So this type of expense occur regularly. That's why this is also a revenue expenditure. Dear student, our next topic is capital receipt. Capital receipt. This is such a kind of receipt which we received irregularly. That means this type of receipt will not occur in an organization regular basis. Very first class I have discussed about capital receipt, so you can take help from that lecture also. So capital receipt, in this transaction, in this math, we have found out that only there is one capital receipt. The organization sell the machine 1,95,000. It is given in the requirement. So capital receipt is 1,95,000. Then capital income. Income means selling price minus cost price. Difference is income. So here look at, you sold the machine 1,95,000. What is the total cost of that machine? Look at, we will find out the total cost. Total cost of that machine means machine purchase 1,60,000 and carriage expenses given for that machine 75,000. Installation expenses for that machine 15,000. So total cost of that machine is 1,82,500. So we sold it 1,95,000. So difference is 12,500. This is capital income. This is capital income, 1,95,000. This is capital receipt, and the income minus the receipt minus expenses. This is the capital income. Dear student, requirement 3 from your books. This is your homework. You will try. Inshallah, next class I will solve it for you. All the best. Thank you very much.